Let's go ahead and start booking DeCre Food Trucks LLC year catch-up mode for January. Our first invoice is we can see was paid by a credit card, so let's go ahead and book it. We can see that it was purchased from Food Traders, okay. Again, let's make sure the date is correct. Since we're booking in the year catch-up mode, it's very important to make sure that dates and check numbers and all the other charges are correct. So again, let's go ahead and make sure the date is correct, 1/15/2020. For reference number, let's go ahead and use invoice number. Alright, let's make sure we have the correct account selected. Yes, 6258. We only have one in this case, but still we want to make sure. And let's go ahead and enter the reference number into the memo field. Now, what's also important to understand here, and we'll do it for every entry, what's going on in terms of debits and credits. So we have our account 21100, that's our credit card account, and since we're paying this bill with a liability goes up. Liabilities go up when we credit them. So let's go ahead and enter that credit amount that we paid, $602.91, and we're going to enter it right here. So again, it's important to understand what's going on behind the interface. So right here, we just entered the credit for this account 21100. That's a liability. It goes up. What are we buying with this invoice? Okay, so we have meat products, bread products. That sounds to us like that's food purchases for our food truck. Okay, so let's go ahead and enter it right here. Everything falls under that category, so we're going to just lump sum it. What's going on here? Well, our food purchases account is 6200 right here. Expenses are going up, right? So since we incurred those expenses, they're going up, and expenses go up through debit. So right here, we debiting 6200 account with purchases, supplies, and we can see that our debits and our credits are in balance, and that's what we want to achieve with every entry. So again, let's make sure, let's make sure that we enter the correct date right here. It's date paid, not the date of the invoice. We would be entering date of the invoice if we were booking it live on an ongoing basis, but since this is in a year catch-up mode, we're going to be entering and posting it as if basically we're posting it after the fact. So the entry is now in balance, the date is correct, we have credit card, we have amounts. Let's go ahead and click save and close. Clear this for our next invoice. Let's go ahead and post the next invoice. It's also paid with the credit card, so let's go ahead and enter it. Okay, we have our credit card account right here. Excellent. That's already selected. That's the only one we have. What do we have here? Well, it was paid by credit card on 1/26/2020. So let's go ahead and enter it. For reference number, let's continue using our invoice number. We purchased it from To Go Packs. All right, excellent. Amount paid, $83.17. Let's go ahead and continue using it in the memo box. Now, again, what's going on here? First, it's always important to establish what are we debiting, what are we crediting, because that helps to figure out what is that we need to book to offset the entry. So 21100 account is being credited, $83.17. Why? Because we're purchasing it with a credit card. So we're incurring a liability, and liability is going up. And liabilities go up through credits. What else is happening here? Well, we're buying food containers, drink cups, napkins. That sounds like restaurant supplies, right? Right here. So our account 6100 will be debited. We have to debit it just to offset the entry, but it also happens that expense accounts go up when we debit them, and therefore 6100 is going up when we debit it. Makes sense. Expenses going up, and our liabilities go up because again, we didn't pay it with cash. We didn't pay it with our money on hand. We borrowed, and so liability is going up and expense is going up. So at this point, the entry is good to go. Let's make sure everything is correct. 8317, 8317, 126, 126, credit card. We're all good to go. Save and close. Let's go ahead and book our next invoice from Clean Depot. Okay, this is a check number, all right? So we know that this invoice was paid using a check, so that came out of our bank account. So let's go ahead and write a check. Make sure that this button is unclicked. If you were to book it live and print checks later, this would be clicked and you would not have the check number here. It would get assigned automatically once you print the check, and we'll cover it in some of our videos. In this case, again, we're booking it after the fact. Potentially the check was written by hand. At this point, we're just entering into the system. So you would unclick print later, and let's make sure we have the correct account selected. In this case, we have cash and we have bank account. So we have only one bank account. Let's go ahead and select that. Let's enter it right here. It's 11100. All right. And let's go ahead and take a look what happened here. So we know that check was 1002. So let's make sure we enter the correct one right here, because again, occasionally QuickBooks might assign the number that may be erroneous. So do not automatically assume that when you're booking after the fact, you have the correct number. Double check it. When did we pay it? We're going to enter the date we paid it, not the invoice date, because that's when we issued the check. So that's going to be 2420. All right, we paid it to Clean Depot. Here we go. 9714. All right, let's go ahead and continue using invoice number for our reference. It's a good and reliable way to connect things later on if we have to. What's going on here? We have garbage bags, sponges, towels, wet wipes, all-purpose cleaners, right? So to me, that sounds like that would be cleaning supplies, right? More or less. So let's go ahead and book it in there. Again, let's put the invoice number into the memo box. So we have cleaning supplies. So what just happened? We're writing a check from our bank account. Our bank account will go down. Bank account is an assets. So how do assets are reduced? They're reduced through credit. So we have to credit it. All right. What else is happening here? Well, we have our expense account 6400, and expenses are going up. So let's go ahead and enter it right here. So what do we have again? We have debits and credits in balance. And again, important to understand what's going on behind the interface, right? Behind the interface, we see that this is a debit right here to this account, and this is a credit to this account. So essentially, this represents this, and again, everything is in balance, and I want you to understand that that's an important part of any accounting entry. So let's go ahead and save and close. And let's clear this for the next. Next invoice, we have invoice paid by credit card. So let's go ahead and enter that. Okay, we have a purchase. We have our credit card account, right? 21100. All right. We know that we're borrowing, so our credit card balance will go up. Our liability will go up. All right. So let's go ahead again. Make sure you're entering the date. When we're booking after the fact, please keep in mind that invoices might be out of sync. They will not be necessarily chronologically organized. They might be sorted by month, but not chronologically organized. So keep attention, pay attention to the dates when you're entering, because they may not be sequential. Again, 478, 102 right here. We're buying it from soft drinks. There we go. Amount is 211.02. Again, let's continue using invoice in the memo box. What do we have here? All right, we have food and drink, drink purchases. Here we go. So what happened, right? We already booked the credit, right? So we know the other entry has to be offsetting in debits. And that is correct. We just purchased some drinks, right? So that's our expense. So again, you can see that we're debiting an expense. Expenses go up when we debit them, and we're crediting a liability. Liabilities go up when we credit them, right? So here it is again. Right here you have your debit. Right here you have your credit. Very important to understand what is going on behind the interface, right? Let's go ahead, save and close. Clear this for our next entry. All right, next invoice. Next invoice was paid by a check. All right, so let's go ahead and write the check. Okay, see, in this case, the check number got picked correctly. It just happens to be sequential, but always double check it. So we paid it on 124. We paid it to Big Lease Company in the amount of $1,370. And our invoice number. So let's go ahead and get the simple things out of the way. What do we know? We know that our bank account is going down because we're writing a check, right? That check will get cashed and the money will be leaving our account. How do we reduce asset accounts? Because again, remember, bank is an asset account. We reduce them through credit. So let's go ahead and enter it right here. All right, so now we need to put our debits because debits and credits have to equal, right? Well, right here, previously we were able to lump sum things. Right here we have a little bit of a collection. So let's break it down. What do we have here? We have a lease for our food truck, right? So that falls under rents, vehicles, so on and so forth. It's not the full amount, so let's go ahead and enter what we have there. That's 1,000. All right, what else we have? We have insurance fees. So right here, let's go look. Okay, we have our insurance expense. How much is that? It's 150. We're breaking it down. What else? We have registration fees. So that would be under dues and subscriptions at $50. Okay, and then we have maintenance fee. So let's say that's repairs and maintenance right here, 75. And then we have promo artwork fee. So what that is, that's essentially the artwork that goes on the truck, and perhaps we didn't pay for it right away. We paid for it over time. That falls under advertising and promotion, right? So they placed nice paintings on the sides of our truck per our request and design, and now we're paying for it. So here we are. Let's go ahead before we explain debits and credits and post the invoice number in the memo, just so again it's easier for us to track things. And at this point, again, we know the credits, right? So what's going on here? Well, these are the credits in this case. They're set up automatically by the interface, all right? And these are, in this case, the debits. So let's break it down. Right? You can follow me that I'm entering the account numbers and corresponding amounts right from here. All right. Voila, right? Our debits and credits equal. In this case, we're crediting just one account, but we're debiting multiple accounts. That part is, is not important. You can essentially credit multiple accounts and debit multiple accounts. The number of accounts here doesn't have to equal the number of accounts here. What has to equal is the bottom line, the sum, right? The sum of all debits have to equal to the sum of all credits. And that's what we have here, right? This is the credit. We credit the bank account. It's going down. What's here? The debits, right? We're debiting these expense accounts and they're going up because we're incurring these expenses. So let's go ahead and save and close. Clear this for our next entry. What do we have next? All right, we have another invoice, and it was also paid by a check. And again, see, they're not sequentially organized necessarily, so pay attention. Let's write this check. Again, it was coming out of our bank account. That's the only account we have. Let's correct the check number. And it was written to utilities to go. Let's go ahead and enter the amount. Okay, let's make sure we enter the correct date right here, right? Because we paid it on 1/9/2020. I want to make sure that we enter the correct date. It's important to enter the correct date because it will assist you down the road with reconciliation of your bank account. And we will cover reconciliation, and you will see that. Again, occasionally mistakes will be made, and we will catch them during reconciliation. That is the purpose of reconciliation. Again, we'll cover it in our future videos. Let's go ahead and enter memo. What do we have here? Portable water, propane, solar, I would say, even though it says rent, it's really energy, air. It's in the name in many ways, so it sounds like utilities. So let's go ahead and lump sum it all into the utilities right here. All right, and again, we're going to continue using invoice number as our memo. We have utilities. Let's go ahead and reflect it. What's going on? What are we debiting and what are we crediting, right? So we know our bank account is going down because we're writing a check. Utilities to go will cash it, and that will reduce our account by $257.49, right? What else is going on? Well, our utilities expenses are going up, all right? We're spending money on utilities. That means our expenses on utilities are going up. So again, this is the debits, these are the credits, they equal to each other. We can go ahead and book this entry. Okay, I got a reminder here, never to run out of checks. That's fine. Okay, we won't. Let's go ahead and clear it for the next entry. Now we will book some receipts that we got, right? Those are not invoices that we paid. Those are receipts that we got as a result of the transaction. So let's get on those. We get a receipt for gasoline, right? So again, banking. It's a credit card charge. We know right here, right? And we can see that it matches, right? 6258, 6258, all right? It's a purchase, and it's from a gas station. So let's go ahead and enter that. The date on it. In this case, we can enter the date, not the date we paid, but the date on the receipt, because that's the date we paid it, right? For reference, we can use the transaction number, the amount. And let's continue using transaction number in the memo box. What's going on here? Well, we're buying fuel, right? So what do we have for fuel? We have track expense for fuel, $63,200, right? So what happened, right? By now you know, but I want to continue reinforcing teaching you on what is being debited, what is being credited, because that is one of those things that have to be hardwired for a good bookkeeper and for a good accountant when they're reviewing, I mean, absolute requirement. Let's go ahead and take a look. So 21,100, that's our credit card account. We just borrowed, right? We filled up the tank with gasoline, but we didn't pay for it, so we owe money to somebody, and that's a credit card company, right? What else happened? Well, our fuel expense went up, right? And therefore, here we go. 63,200 account is going to be debited. Makes sense. So you can see that our entries are balanced. Debits and credits equal to each other. Our expense account is being debited. It is going up. Makes sense. We're buying gasoline or diesel fuel in that case, maybe. And what else is happening? We're borrowing. So our liability is going up because we're crediting it. All right. Let's go ahead and click on Save New because we know we just have a couple more receipts that we have to go ahead and book. So Save in New. Again, we're going to go ahead and clear it for our next entry. Another gasoline receipt. Excellent. So let's go ahead and book it. All right. So it's from our gas station. What else we have? We have the date, reference number, amount. Again, let's continue using reference number in our memo boxes. And we just covered this one, right? So that's our fuel expense for the truck. Again, we just covered it, but I do want to reinforce it. What happened? We borrowed some money to buy this gasoline. So our liability account is going up because we credited. What else is going on? Well, bought some fuel, right? So expenses are going up. And in this case, It's our fuel expense, 63,200, and we're debiting it. Again, you can see debits and credits equal to each other. We're good to go. Save and new. Let's go ahead and clear this. All right, we got another one. This one is an order online from Online Market. We all love those, don't we? So let's go ahead and book that. Again, it's a purchase. All right, we got our Online Market, and the date on it is 1/15/2020. Reference 478. ID amount. All right, let's continue using that. So let's take a look what's going on here. We're buying knives, kitchen cutting boards, so on and so forth. So to me, that sounds like tools, right? So those are the tools of the trade. We're not buying anything over the limit that would require us to capitalize it. So let's go ahead and expense it under tools. So back to our debits and credit. What just happened? Again, we purchased some tools that we're going to expense. We didn't buy them with cash that we had. We didn't write a check. We borrowed. Our liability went up as a result, right? So crediting it. What else happened? Well, we bought some tools that we're going to expense. We're debiting it. Our expenses are going up, and that's how we increase our expenses. You can see that our debits and credits are in balance again. We're good to go, right? So save and new. Let's go ahead and clear this for our next entry. All right, what's this? This is a return receipt. This is a good one, right? So we just bought some kitchen knives, cutting boards, and we realized we bought too many. How do we book the return, right? Well, with interfaces, again, you got to pay attention, and there's a button right here that allows you to reverse debits and credits on the interface. So let's go ahead and do it, and then we'll go over the details. So this is a refund, right? This credit is a little bit misleading, you'll see in a second, but let's concentrate on the fact that this is a refund. All right, this refund is coming out from our online market. Excellent. Let's put the date on it. The reference number, again, we're going to continue using the same. What happened here? We're getting refunded $184.88, right? So let's go ahead and enter that and get into the details. So what happened, right? We know our account 21100 right here. That's our credit card account. We're returning some items, right? So what will happen? The merchant will return that money to the credit card, and therefore our liability will be reduced. How do we reduce liabilities? We reduce them through debits, right? So in this case, remember, if you had the button clicked right here, this window would be credit. In this case, once you click this button on the refund, this window becomes a debit for this account. Very important to understand what's going on behind interfaces. What are the debits? What are the credits? Let's go on and book the rest of it. What happened here? We're returning some of those tools that we just purchased, right? They're no longer an expense. We're reducing our expense, right? So again, we're going to go ahead and enter it. And how do we reduce expenses? Through credits, right? Because they go up when we debit them. Oops, a little bit too much there. Here we go. We go ahead and enter it into credits because credits reduce expenses. So 62,500 account expense for tools just got reduced, and our liability got reduced because we returned some of those items, right? So that's how we do it. Please pay attention. Once you switch this button right here, again, this window, if it used to be what, right? It used to be credit. Now it's a debit, even though you click and here it says credit. It's a little bit misleading. It's due to the fact that the relationship with banks, is a bit reversed, and we can go into it in another session. But again, pay attention on what's going on behind interfaces. So again, this window right now is your debit. This window right now is your credit. We're good to go. Everything is in balance. Our debits and credits are in balance. We're going to go ahead and save and new. And we're going to clear this for our next entry. All right. Next entry is cash advance withdrawal. So what happened here? Well, the owner of the business borrowed some money from a credit card company in the amount of $2,500. So that would be a purchase or charge, right? So we're going to switch back. All right, we're still using our liability account. All right, what's going on? Well, if we borrow $2,500, the liability account will go up. Liability accounts go up when they're credited. So let's go ahead and enter it right here. So we're going to enter our credit first, right? Right here. The date is 1/7/2020. I'm going to enter that, 2.5. Again, see, after we switch this button, this window is now credit, right? And if it's credit, this account is credited. And since it's credited and it's a liability account, it's going up. So our debt to the credit card company went up by $2,500. What else happened? Well, we took some cash out, right? And we probably have it for a short, brief period of time in possession, right? So right here, we have $2,500 that we took out from our credit card company we borrowed. So right now, what just happened? Our assets went up because we borrowed, we took cash, we have in possession $2,500, but our liabilities went up as well. We owe that money to somebody. So again, after we switch that button, right, from the previous entry, this amount is now a debit, right, because our cash is going up, and this amount is now a credit because our liability is going up. So let's go ahead and book that. What do we have next? We have one more receipt, and that's bank transfer payment, right? So this is what happens when we pay down our liability from our bank account, right? So again, we got to switch the buttons, right? It's an equivalent of a refund. Let's go ahead and clear this. So right here, we're going to click refunds, right? And we're going to enter our account here. Excellent. We're going to use the same account number. We made a payment of $500. So again, even though right here it says expenses, interface is sometimes misleading. So what we're going to do actually, we're going to create and choose our bank account. Again, they do a good job in helping to develop user-friendly interfaces, but sometimes they're a bit misleading, and it's again very important to understand what's going on behind the scene, right? So let's go ahead and take a look right here. So our credit card account, 21100, right here. What just happened? Right, what's happening with it? It's going down, right? The liability is being reduced because when you pay down your credit card account, you owe less money. So we're debiting it. And again, we know that once we switch this button, this window is now debit, right, for this account. What else happened? Well, we made a transfer online from our bank account, and our bank account went down by $500. That's the payment we made, right? We transferred cash from our bank account to our credit card account. Credit card account, again, is a liability. It's reduced through debits, right? Bank account is an asset. It's reduced through credits. So again, bank account is reduced. The balance is reduced by $500. And our liability balance with the credit card is reduced by $500. Debits and credits are in balance. We're good to go. Save and close. That concludes booking invoices and receipts for January. After that, we will move forward to reconciliation.